Good evening everyone, this is Richard Faulkner for Forex Investments. Now I'm going to do a follow-up video for the Forex weekly review. I've had a few messages just with people wanting to know how to use the Forex weekly review, and this is I'm going to show you some trades, I'm going to show you the entries, I'm going to show you exactly how I take them, and hopefully this will give you an idea on how to trade the weekly review and how to trade the Forex markets. So Monday, bank holiday. A lot of people don't like to trade the bank holidays, but you know, I've got no problem with it. I quite enjoy it. It's usually a couple of hours, first thing in the morning, and then I'm done. So what I said on Sunday was you want to be trading outside in for a bank holiday. So what do I mean by that? Well, very simply, you want to find a pair that's been range bound through the Asian session coming into the bank holiday. Now this particular pair is the pound USD. So I like to get some on desk for 7, which was about there, but being a bank holiday, certainly wasn't going to be at my desk for 7 on this Monday. Anyway, 5-minute chart, we're coming down to support here, and this is round about 10 o'clock in the morning. Now there's no point buying support or selling resistance. It's unless you're prepared to have a bigger stop, it's a losing proposition. The reason being is that the big traders or people who want to fill their positions need stops, and this is why I trade stop hunts, simply because you want to be trading after the big boys have got into the market. So we've got a level of support here, we've got a level of resistance here. Very easy, everyone can see this. Market comes down, takes the stops, and on this bar here, this green bar here, is your first signal, if you like. Buying's coming into the market. It's as simple as that. Red bar selling, green bar buying. I mean, it really doesn't get any easier than that. Buying's coming into the market. We're in a stop hunt. Great. Okay, now you've got my attention. As we come up, this wasn't a particularly good entry actually, but I took it anyway here. We came up, we did one final last stop hunt, which was down below here, and then there's your reversal bar. This would have been a better entry here. So stop hunt on a stop hunt in a stop hunt area, can't get any more trappier than that. And then basically there's your entry, and there's your bar. It snaps the price away. Everyone's trapped down here. And if you are down here thinking it's a continuation move down, you've just ruined your bank holiday. So this is why they do it, and this generates panic in the market. And basically what they're trying to do is get these traders upside down so they can then force the price up to this stop hunt level and obviously exit their trade. So as the price comes back down, they will buy the market again, and then the market starts taking off. One final push. You want to be exiting as they are exiting and taking the final bits of final stops, and then the market comes quickly back down into the center of the middle of the range, and that's your day done, and that's your Monday bank holiday trading. If you see it, put it in your arsenal. It's very easy to spot. Go back, do your research, mark off the bank holidays, find the ranging markets, and just trade like that. And you know, it's a couple of hours and then you're done, and go and enjoy the rest of your bank holiday. So that's what I mean by you want to be trading outside in. So you don't want to be trading in the middle of the range, you want to be trading outside in. So that was 30 pips on Monday, 13 pip drawdown. Again, not the best entry, but there we go. For a bank holiday, it's not bad. Okay, now what I actually said with regards to a follow-up after the bank holiday is they are going to move the market big through the Monday into Monday evening, Tuesday morning. They are going to move the market big, and this is why you sleep. And these are great trades if you can find them. So sticking with the pound USD, price action then comes up towards where the previous stop hunt was, and then starts consolidating. So wherever we find consolidation or a price level that's been tapped a few times is where we're going to find stops. So if they're going to move the market big, they're going to take stops one last time, aren't they? They're going to want to reload their positions. They're going to want to fill their positions, put even more size into the market before they actually move the market up. So price then stop hunts again, comes down to the 200 EMA on the 5 minute, and buying volume comes into the market on this bar here. So I didn't buy on this bar here. I waited for the price to come back down to the bottom here. I actually had a 2 pip stop on this because I didn't want to risk any more. I didn't have 1% on 2 pips. I always have 1% on 10 pips. But I just didn't want to risk any more in the market, knowing that I wasn't going to be awake at this particular time. So this is round about 12 o'clock, 11 o'clock in the evening. Price comes down. I buy on this red bar here. Stop goes here, just 2 pips below the market, and then I'm off to bed. And shortly afterwards, the market just screams north for 97 pips. Now this red line up here was my target. If I move it down to the 1 hour, you can see this. That dot there is my target, and we missed it by 4 pips, which is incredibly annoying. It would have been a fantastic. Would have been a 10% day before I've even woken up. Simple reason why I chose that target there. It's your left shoulder. Left shoulder, head, right shoulder, and then obviously we have the move down. So I come to the desk at 7 o'clock, and I'm faced with this dilemma. Do I hold on and try and achieve my target, or do I take my profit? Now, we've already moved up to the right shoulder. I've got 53 pips on the table, 55 pips on the table. It's 7:30 in the morning, and it starts to pin to the north here. I mean, there's no magic indicator. There's no magic secret thing I've got running in the background telling me when to exit the market. All I'm looking at is these pins coming into the market. It's 7:30. There's going to be a lot of volume just about to come into the market where everyone starts trading. Right, I'm going to take my trade off, and that's it. Next bar starts moving down, and the market gets hammered. So it's as simple as that. 55 pips, 5.5%. I'd certainly take it. And looking at that exit, I was very happy with that. Would have been better if the exit was up here, but there we go. That's trading for you. So those are two things that were mentioned in the Forex review on Sunday. You want to be trading outside in for Monday, and be aware of the big moves on the bank holiday evening. The market is going to get run for you, and there was a setup. I mean, you couldn't have a better setup than that. Okay, moving on. Also in the Forex weekly review, I'm just going to take this down to the Euro USD. Now, what I said, we were actually long here. Now, someone sent me a message on Facebook, obviously saying, yeah, all these trades on Facebook look amazing, but do you have any losers? And yes, of course we have some losers, and I'm more than happy to talk about the losers. But what we as you can remember from the Forex review, we were actually long at this particular level here. Now, what I said to you before we opened up, I said, don't be surprised if they run the market south and then move it north. And that's exactly what they did. So on the open, they ran it south, they did one last stop hunt, and then ran it north. Unfortunately, they did this on a bank holiday, and they did this at 6 in the morning. If this here, 8:30 is 6:30 in the morning. Now, I'm certainly not going to be up at 6:30 in the morning on a bank holiday. and I think very few people are, and that's exactly what they've done. They've run this market. They've run this market so there's no participants in the market at this particular time of day, and it also gives the Asian market a chance to get a trade on, because they they have a bit of a tough time most of the time. So fair play to them. They got the trade on. They moved the market north. Great. It looks like we've missed it, but in effect we haven't. What you're actually looking for, and this is actually probably the better trade to take, because taking this trade can be catching a bit of a falling knife, and I'll show you this on the pound USD before I go tonight. This is very, very difficult to catch. I mean, we're down by the 618 fib, so you want to be looking long, but how far is it going to go? And this is a perfect example of why catching a falling knife is so difficult, because if we go down to the 5 minute, if you had been awake, I was happy to take the stop. This bar here hadn't actually happened on Sunday, which is all very suspicious, because the market comes down exactly to it. Anyway, that's by the by. So this bar hadn't happened on Sunday, so we open up, we come down, stop, and I lose 7 pips. Great. Not too fussed about that, only small size. But you can see here that the buying then comes into the market here. So in effect, if you then bought this here, you'd have been stopped out again, and then buying comes into the market here. So in effect, it is catching a falling knife, and it is very difficult to do. And there's no I wouldn't say set criteria. There's nothing to say how far this market's going to go. So unless you've got deep pockets where you can buy here and then buy here and then buy here and buy some more here and here and here, then that's not the luxury a retail trader has. If you're a big bank, yeah, great, no problems. If you're a retail trader, you're going to take a couple of hits. If you don't mind taking a couple of hits, by all means, there's no greater feeling than catching the bottom of a market. But there's also a very, very big danger that you're just going to dwindle your account away by trying to catch the bottom of that market. And in effect, it's probably one of the worst traits a retail trader has, is trying to catch the bottom of the market. So anyway, Monday comes, Bank Holiday Monday. Price then does this, and you think, bugger, I've missed it. But that's all this is here is the setup. So there's no point panicking, no point rushing, no point getting in until you actually know for certain that the trade is on. And by this move up here, you know the trade's on, because this is buying coming into the market, showing you that people are interested in moving this particular currency pair higher. So what are you looking for? Well, you're looking for the stop punch. So where are the stops? Well, there's going to be stops below here, and there's going to be stops below here. Now Monday, obviously I was concentrating on the pound, but I'd actually come back to my desk Monday and I'd seen this, and they'd taken the stops here, and I was like, whoa. It's not a great stop hunt. It's nothing amazing. I think we're looking at possibly a pip, and there's a very strong possibility that we're going to come back and take it through the course of the evening. So for my own sanity, because if they had taken this and then run it north, having waited and obviously done the preparation the week before, then this is where the psychology comes into it. Because if you are not in the market and this just runs north, especially expecting big moves through the Tuesday night, then you're going to wake up on Tuesday and start revenge trading, and it's one of the worst possible things you can do. So all I did was take a first initial position, very small, not too bothered, had some skin in the game, as they say, and then if the market did run, fair enough, I won't make a lot, but at least I'll make a little, and then that was my stop down there. So my stop was 10 pips below the stop hunt, a small trade. So in effect, I had a 20 pip stop on that. That's fine. You know, I'm happy with that. If you want to wait, that's great. That's not a problem. However, knowing, and I'm just going to put this on the 1 hour actually, because you'll be able to see this clearer on the 1 hour. Here's the 618. Here's your base camp. Here's the stop punt. Here's the buying. There's your first level of stops. Magic. This is Monday. Tuesday, if they haven't run the market and it comes back down to this level, you've got to smash it with everything you've got. So, and this is where I'm going to start putting the trades on the screen now. We're in it Monday night. Wake up, 7 o'clock, get to my desk, there's the stop punt. This big bar, this big red bar, trying to get everybody to sell into the market. Comes down, and in effect we take the stop punt. So, what are we looking at? Let's start dropping the trades onto the screen. As soon as the stop punt happens, I go down to the 1 minute chart, I see buying coming into the market, and there's my first trade. Now, someone was asking about losing trades. That's fine. We'll talk about a losing trade. Once we've got this coming in and we actually see the buying coming into the market, then I'm going to start loading up and I'm going to start putting more trades into the market. So, we then look to add to the position. And this is my second trade, if I can find it. And that's my second trade. So buying here and then adding another position, and we take a 6 pip loss on that. That's fine. We're already in it here, and we've got a bigger stop on this one here. There's the stop there. So there's the first stop, which was 8 pips. Second stop, which was 6 pips. Okay, not a problem. We've got stopped out on that. We then look to add another trade into the market, which I think was this one here. Nope. Which was this one here. So basically the market comes back down to the 618. And again, we managed to get another position into the market here. So this here had 0 drawdown, and I think I had well, I would have had a 3 pip stop on that one as well. So we're long one position here, we're long another position here, we're stopped out on this position here, and we've got another position here. So in effect, we've got 3 positions in the market: 2 full, one full loss, and 1 half size position, which is great. Market then moves up, and you see this buying here comes back down to this 618 or this stop hunt area and starts pinning. Once you see this pinning and this bar here, it's game over. It's game over for the shorts. The shorts are going to get fried, and then you obviously see this huge buying bar coming into the market, whipping the price away as everybody either tries to get out of the trade or they get trapped upside down, and the market starts to move in your favour. Now, I didn't want to add to this position, even though I saw this. If I had added to this position and we had rolled over, would be 1, 2, 3, 3.5 positions short on the day, which is far too much risk. Anyway, the market then moves up, and the first place you're going to look to exit some of your position is the first stop hunt. So because we hadn't filled this position here, and it was more to do with psychology than anything else, I'm going to take this position off first. Because if I put my stop break even, there's every chance that's going to come out and get stopped out for break even, when you still want to be taking money off the table. You always want to be taking money off the table. You don't want to be leaving anything for them to come and get. So that, you position with the worst entry, you want to take off the table first. So that was taken off there. The market then comes down, and this is a big rejection bar into this stop hunt. Now I wanted the market higher, however I sold half of my initial first position here when I saw this settling down below this price. I thought I'll take some more off the table, great, we'll keep going. Market then comes down to this level here, having taken this half position off here and this half position off here. And basically what this coming down here has generated more stops. These here are just points of interest, and this is for a later date. I'll have to explain those later. But this stopped obviously down below this level here. So having taken these positions off here, I'm now looking to add to the position. So let's see, let's just drop them on, see if we can find them. So, we come down, we stop hunt below this level, we see the buying coming into the market, we then add to the position, and then this here is our final take profit position, where selling finally comes into the market. So that's what my trading looks like for today and for yesterday. So we have one loss here, we have a winner here, we have a winner here, we have a winner here, and we have a winner here. I don't know how many pips that is. I'm not really too fussed about counting pips. We're already up 5.5% from the morning. This here has actually netted me another 9% on the trading day as well. So as you can see, it's all starting to add up, and this has all come from the Forex weekly review, which I've laid out on the Sunday for everyone to be able to do this. It's not, it's all there. It's just takes practice, takes time, but if you are persistent with it, you will get it. And again, it's just buying and selling. Buying coming into the market, selling coming into the market. Take your positions off. Stop hunts, buying coming into the market, selling coming into the market. Take your positions off. Simple as that. So finally, I will just show you one other thing. We had some trades on the USD JPY today as well. Let's get these fired up. So I took this off because obviously the euro started to. There's a short position here. 10 pips. It's just a nice little bonus. 10 pips, and I had a 3 pip, probably a 4 pip stop on that one as well, and we also had I took a bit more out of that. We also had stop out there. So I took half the position off here, had a sell there, and then took half the position out off here and got stopped out there. So again, we had, what did we have on that? Would have had a 3 pip stop on that and a 4 pip stop on that. Now, a lot of this all stemmed from the reason I started selling the USD JPY, and I mentioned that you possibly should not be selling the USD JPY. The direction is long. Was from something I posted on Forex investments on our Facebook page. So this was all there ahead of time. So if we'll have a look at this. So if you do just want to keep an eye on this, this was 10 hours ago. So this was probably posted about 9:30 this morning. US banks speculating we could see month-end dollar selling as hedge positions are unwound. Hashtag Euro USD. Okay, so once you see that, this is what is going to change your sentiment in the market. So if on Sunday I have said do not sell USD JPY, and then Tuesday comes out and we get a new piece of evidence or a new piece of information that's going to change that, then for God's sake, change your outlook on the market. Don't be stubborn and stick to one set of rules that that you set at the beginning of the week, because ultimately that's not what trading is about. You have to be adaptable, and you have to be able to listen to what's going on in the market and then trade accordingly to that. So in effect, I then started selling the USD JPY. There was a lot of risk in the market, which came in later, and this exit here looks pretty dismal. But if you're having a 4-pip stop, I'm not too fussed about that. It would have really been an amazing day. And again, same with USD CAD. As soon as that came out, let's have a look at this USD CAD. There we go. So USD CAD, this was my short on the USD CAD. We got stopped out, break even on this, and that would have been a nice 50 pips. But again, this was 9 o'clock this morning. I'd found that news feed. Subsequently, oil's obviously forced the price out. That sound bit had come out on the news feed, and then that changed my sentiment for the market, and I started selling USD JPY, selling USD CAD, and obviously sticking with Euro USD. So hopefully this has shown you how to use the Forex weekly review. I am just going to touch on one last thing, which is this news feed. Now, I don't get paid anything for this. This is just something that I do use in the market, and it is very, very useful. So in effect, it's called Talking Forex. It's 20 quid a month. It's for nothing, and if you want up to the second instant news feed on what's going on in the market, then I strongly suggest you get a subscription to this, because they really are an excellent insight into what's going on in the market. So that's just again, I'm not getting paid anything for that. That's just a very, very useful tool. So that's Talking Forex, cheap as chips as well, for what you get. So finally, I hope it's all been pretty useful to you. If you are interested, we do have a live trading room. We're also thinking about teaching this in the market. We haven't put anything together yet, but that's going to be some way down the line. But if you are interested, by all means, send me a message, and we'll put you on the list. Otherwise, enjoy the rest of your week. I hope you have a great week. Thank you very much. Bye bye.